Hey guys, Tiffany from Rock Blue Homes. Wanted to just reach out and tell you guys a couple things that is going on here in Baltimore, Maryland with the investor real estate market. So the deals are becoming more plentiful. We have some investors that feel that deals are overpriced right now. So this is what I want to talk about. I want to talk about a deal, a long-term buy and hold being overpriced in someone's opinion, right? And I kind of want to start off by talking about my dad. So my dad and my mom, I'm an only child, and my dad tells me this story of when he and my mom met. They met very, very young. They had me much later in life, but they met when my mom was 14 and my dad was 16. And so he tells me that when they first started dating, he could take my mother out and get 2 cheeseburgers and a hamburger and a fry and 2 Cokes for less than $1. So he remembers, like, in his mind, like cheeseburgers were 15 cents and hamburgers were 10 cents. I mean, this to me seems like crazy because I can't, like, really wrap my head around that. I mean, change, my children, right, who are 7 and 10 right now in 2023, they don't even understand why coins are a thing. Like, they feel like we shouldn't even have coins. So I kind of like have a hard time imagining that. But anyway, so, we went to the Cheesecake Factory last month for my daughter's birthday. And so my father is like, well, how much are French fries? Like, what is, I can't see the menu. I said, Dad, please, I will pay the entire dinner. This is Gabby's birthday. Don't worry about the price. Just order what you want, right? Him and my mother, they do this song and dance. I mean, he gets her glasses and then he looks at the menu and then he's like, $6 for French fries. I'm like, Dad, please just eat the fries. Like, if you want, get 7 orders of fries, right? If that's all you want. Like, it doesn't matter, right? But to him, he can't wrap his head around how French fries could be $6 in a restaurant. He went on to say, like, maybe at the stadium, the baseball or football stadium, but like $6, I mean, just on and on, right? So I'm going to wrap this all back around to real estate investing because long-term buy and hold properties, if you feel that they are overpriced, what you've got to ask yourself is, and I have a couple guys that have been investing in Baltimore for 20, 30 years. And they'll say, I bought a house on that block 20 years ago for $15,000 and people are selling it now for, $85,000, right? So I say to them, so in 20 years, the value of that house went up $75,000, right? So if you buy in now and things continue to track the way that they were, the way that they have been, right? It's not an exact science. We have the economy, we have inflation, we have a lot of things to consider. But short of really the neighborhood taking a turn for the worst or a turn for the better, it's probably going to appreciate at a similar rate. So 20 years from now, if you buy in at $85,000, right? In 20 years, we should be at $160,000. So it's not an exact science, guys, but at the end of the day, you're playing the long game. So even if you are, in your mind, overpaying $5,000, $10,000, $20,000, as long as the numbers make sense on the deal, you have to have a positive cash flow after analyzing all of your costs and holding fees. What are those? Property taxes, insurance, a percentage of vacancy, because no units are going to be 100% occupied every single year for 20 years, right? Property management fees, common area water bills if it's a multifamily. These are the holding costs. These are things as a real estate investor you have to understand how to build into your profit projection, your cash flow analysis, right? So we have a simple form we use. We can help you guys with some of this if you like. Feel free to reach out to our office. I can be contacted directly at Tiffany, Tiffany, at rockbluehomes.com. You can also contact us on all social media, on our website. however you would like. But we would love to help you pick up some long-term buy and holds. That is what we are recommending. We are not recommending continuing to flip properties unless you're going to do a rental grade flip for an investor that wants a turnkey property. Right now, the residential market is slightly depressed given the interest rate increases. So we're advising our clients to steer away from the flip unless it is something that's truly a home run. You know, you get a lead and, you know, it's your aunt's best friend and she, you know, her kids need to sell because the aunt passed away, or I mean, whatever it is, right? Sometimes flips still make sense, but it's farther and fewer between when the residential purchase market has taken a dip because your buyer pool at the end of that flip has shrunk. It shrunk for many reasons. It shrunk when the interest rates increased, but it also shrunk even more because, you know, the buyer has in their mind that loans are overpriced right now. So don't even get me into that because everybody's going to refinance in like 3 years when the interest rates go back to normal or normal-ish in our mind before this increase. That's a whole nother episode or conversation. So let you guys go today, and we'll be in touch soon.